the Hang Seng market, which is up over 200 points.
They're working to remove the Foxconn name from what will now be an entity that will only be part of Vedanta's.
The government board has approved the proposal to buy 26 Rafale fighters, Rafale marine fighters, from Dassault Aviation.
Car trade. Now, the companies in focus, it made an acquisition yesterday. It bought OLX India's auto business, Sobek Auto. There we have it. A rock-solid opening this morning. 70 points higher now on the Nifty.
Recent, I would say, days, we're taking some money off the table through, particularly in the Indian mid-caps.
Now, the balance 58 to 100% stake, that's 42% stake, has been acquired by the company.
The overall growth momentum, broadly remains strong.
The Nifty is inching towards 19,500, not made its way there just yet.
India's top-line growth, margins, earnings are all fairly ordinary.
Net interest margin, which represents the difference between interest earned and interest expended, may face some pressure.
Rains claim at least 42 lives and hundreds stranded in various parts.
120 points higher on the Nifty, so looking good there. The mid-cap side of things are actually outperforming.
Well, that was the day so far. Hello and welcome to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel D'Souza, and joining me as always, Rima as well as Surbi. Well, we thought that 19,500 odd mark was there for the taking, but we went to 19,515 and we did a bit of a U-turn from the day stop. And the problem today is things are a little bit tricky. It's Tuesday, it's the second half. So the Nifty Financial Services Index, that will play out expiry. I think we should pull up the intraday chart of the Nifty Financial Services Index, and you'll see the way it's fallen, particularly in the last 20 to around 25 minutes or so. So both the Nifty Bank, the Nifty Financial Services Index, both of them have moved lower. This is an expiry-related move that we're seeing out there. And it's very, very important because it's at a crucial support zone. I was looking at the options data, and my reading is the 20,025 to 20,030. That's the crucial level that you want to see some kind of support out there. We just breached that and we bounce off that mark. So that's the positioning as such that we'll defend that mark. On the upside, earlier today we went to 20,200, but that got sold into. So the near-term resistance, just for this contract, 20,115 is important. And this is the final day, Rima as well as Surbi, that we'll have HDFC Limited. That's not part of the Nifty Bank. HDFC Limited is only part of the Nifty Financial Services Index. Does it have one more role to play in this expiry? Because that has close to 15-16% of weightage out there. And after this, it will be available in HDFC Bank's firm. So it's the last time HDFC Limited, pull up the intraday chart of that stock, will be available in this avatar. For the time being, it's seeing some selling pressure. But it'll swing the index, I think so, in the last 60 minutes.
You know, I remember Anuj in the morning was telling us that how the last couple of Tuesdays, all the Fin Nifty weekly expiries were actually very strong.
Absolutely.
The banks pulled up, pulled themselves up and pushed the index higher. But this time looks like the reverse has taken place. The Nifty Bank has slipped 300 points from the day's high. It's currently in the red. And its names like HDFC Limited, we highlighted that. ICICI Bank is in the red. State Bank of India is under pressure. And Axis Bank, that's down close to about 0.9%. In the financial space, not a bank, but in the financial space, Bajaj Bajaj Finance too is, taking it on the chin. So that's down close to about 1.2%. On the gaining side, you've got strength in pharma name. Sun Pharma, Apollo Hospitals looking good. Autos is a mixed bag. Eicher Motors, Maruti looking up in trade, gaining ground. But on the other hand, Hero MotoCorp today is a bit subdued in trade. And you also have ITC powering through yet again.
Well, the market is also trying to find some cues from the international arena, but that's really not happening because it's all over the place. Asian markets had a decent close, but Europe is slightly tentative. We've got some of the wage growth numbers in the UK, and they're pretty hot numbers, again giving rise to expectations about whether inflation will run away and then, whether we'll get more central bank action or not. Futures on Wall Street also negative. Today we get the CPI numbers from the US, and that's going to be a big sort of trigger point ahead in this whole issue about the market's nervousness with the possibility of more rate hikes. So let's see. For the time being, we are holding up for what it's worth. It's not bad. The good part of today's trading action is that unlike yesterday, mid-caps have had a fair share of contribution today. The index has held up right from the morning. The advance decline ratio is still quite positive. And if I talk about some of the movers and shakers, some of the key names. Of course, car trade moving on news because of the acquisition that they've done. That stock's really burning up the charts, 15% higher. Mazgaon Dock, there's anyway no stopping, 10% on Mazgaon Dock. Tata Communications is a stock that we'll talk about. They've increased their shareholding in a company, making it a 100% subsidiary. So we'll have more on that in just a bit. But largely speaking, the mid-cap market is holding up. And you've got a fair amount of action out there. Look at Nykaa, 4.5%. Some of the tier 2 banks like RBNL Bank or even an IDFC First Bank. So there's a lot of stock selection going on. PSUs and defense are a big theme that's playing out. But at the index level, as of course both Nigel and Rima pointed out, we need to watch out for what happens as we get through the Nifty Financial Services expiry. Both the indices, Nifty Financial Services and Nifty Bank, right now struggling close to the lows of the day. So how does one position themselves for the last hour? We have Mitesh joining in as always with some ideas. Mitesh, good afternoon. So what do you make of things right now? Specifically the weakness that we're seeing on the financials. What's the trade you would advise now?
So a couple of things. One, I think, the Nifty kind of retested the highs of 19,500. We got a high of 19,515. The earlier high was 19,524. But the bank Nifty was slightly off the highs. So it has kind of started underperforming mildly. And I think, while there's no negative setup, the intraday charts, I think, are still, on the border of the overbought situation. Maybe that's why the earlier highs are not getting cleared. But I think, this movement is not decisive. What I would want to do is take some profits off, clearly, given the fact that 19,500, 520 has seen supply twice. And while today, I think it's only about 50, 60 points off from there, which is not even 0.5%. But from a technical point of view, you can always buy it back aggressively once the index manages to get past 19,530. So I think that's the way we'll approach it. Take some profits off, lock in some money, some gains into your pocket, and then see if the market is making a new high, and then add on there. And then from there, you can possibly want to ride the next wave on the upside or next level on the upside. Having said that, on the stock side, I have one buy and one sell. VHL is a buy call. It's given a 2-3 day kind of a pullback. And now today, I think is reversing that move and rejoining or restarting the uptrend. So buy with the stop just below today's low of 91.5 and look for targets of around 99 on the upside. And one sell call that's on PI Industries, where I would recommend selling with a stop at about 36.70 for targets of 3,500.
Okay, we'll come back to you, Mitesh, to take a tech check as the day progresses. The last 1 hour, Dipan Mehta, a director at Elixir Equities, is now with us on the show. Dipan, wanted to get your thoughts in on Tata Communications. They've acquired the balance stake in a company called Oasis Smart SIM for about 100 crore rupees. They earlier had a 58% stake. Now they will own about 100% stake. This company that they've acquired develops and provides advanced technologies and personalized services to enable the development of eSIM and SIM technologies. But anyway, this company Oasis SIM was a subsidiary because it had more than 50% stake. What explains this kind of a 7% gain in Tata Com? Is there something else?
Good afternoon, Rima, and thank you for having me on your show. I really don't know if there's any further news. I just about the acquisition from you just now.
Oh, I can't hear you.
It's a small acquisition, $12 million is not going to make much of a difference to Tata Com. But yes, surprised with the up move today. They had another acquisition as well earlier, which was a CPaaS company, somewhat like what Root Mobile and Tanla Solutions or what kind of service they offer, a similar product and service line. But when I saw the news, my first reaction was that why are they so late to this particular segment, which has grown so fast and created two such large value creators like Tanla and Root Mobile. So my assessment of Tata Communications over the years is that it always is perhaps behind the curve when it comes to technologies and then tries to play catch up. I was extremely positive on the company for last several years or so, and I thought the data and numbers come through. There's always a mild disappointment, and all the new initiatives which they try to take in terms of growing the business, that somehow never really contributes materially to the profits as yet. I mean, I could be wrong. It's a company which is under transformation as of now. So our view on Tata Communications is negative, at which it trades at, and more importantly, its track record.
Okay, by the way, let's just look at some of the flashes that are coming in from the Supreme Court. This is the hearing that was ongoing in the Adani Hindenburg case. And the Supreme Court, as Ashmit was telling us, that this is a possibility that we'll get some more idea about the status of the investigation. The Supreme Court is asking the questions, saying what is the status? We had given time till the 15th of August. SEBI's response to that is that the investigation is going on with all available resources. The case will now continue to be heard in August. That is what we know from the court. The Solicitor General has actually spoken in the court as well on behalf of SEBI, saying that we have filed response to suggestions coming from the expert committee. This is in reference to the affidavit that was submitted in the court yesterday by SEBI. So that's some action from the Apex Court. But let's move on and talk about some of the other active parts of the market. The passive indices adjustments come into effect from tomorrow. Vivek is here with more details on how HDFC and HDFC Bank, how the merger is going to play out with respect to the way the indices will treat it. Vivek.
Well, that's right. So, the HDFC Limited and HDFC Bank merger comes into effect day after tomorrow. And, tomorrow in the trading session, you will see multiple adjustments taking place across various indices. So, we'll go through the indices one by one. Remember, the effective date is July 13th. Adjustment date for all of the, changes that come in terms of inclusions into the various indices will happen tomorrow. So, Nifty 50, LTI Mindtree will be replacing HDFC Limited. So, expecting inflows of a little over $90 million into that particular name. In the sensex, it's JSW Steel that will be replacing HDFC and expecting to see inflows of over $160 million. Now, talking about Nifty Bank, no changes there, but HDFC Bank, on the back of the increase of free float, will actually see a weight increase over there. Now, coming to the MSCI impact, it's an important one. MSCI has already said that it will be using an adjustment factor of 0.5 for computing the weight of the merged entity. So, on the back of that, there will be some outflow from the merged entity. Now, looking at the net impact of all of these index actions, the merged entity, that is HDFC Limited plus HDFC Bank, is expected to see outflows of close to $250 million in tomorrow's trading session. Now, talking about FTSE, FTSE, there will be no impact tomorrow. However, FTSE 2 has said that it will be treating, the merged entity, and it will be adding HDFC Bank into its index in the place of HDFC Limited, and it will be using the merger ratio as to how exactly they will be adding HDFC Bank into the FTSE indices. And according to analysts, in the September review, you will actually see inflows of close to $900 million as far as HDFC is concerned. Lastly, you're talking about the F&O space. HDFC Limited futures, remember, will expire tomorrow, so all existing contracts will expire as of July 12th. And lastly, there will be another impact within the Nifty Next 50 space. Jindal Steel will actually replace LTI Mindtree, given the fact that LTI Mindtree makes the higher transition to the Nifty 50. And on the back of that, Jindal Steel too will see inflows of close to $40 million tomorrow.
Okay, quite interesting. Vivek, thank you very much for that. So that is, of course, the street prepping up for the merger and how the indices will look differently. Deepan, obvious question. Actually, HDFC Bank hasn't even had a great run. The bulls will argue that perhaps the next leg is going to come in from financials and then bigger stocks like this one. How would you look at it in the months ahead as the merger finally sort of gets complete?
Yeah, see, Surabhi, I was very disappointed with the HDFC's pre-quarter release, which came through. And clearly, I think they were lagging their peer group over there on all the parameters. Usually, they are, at industry or slightly better than their peer group. So from that point of view, are we looking at a slightly softer quarter for the June quarter? That's something which I'm just trying to figure out. But on the whole, I think you need to give 2-3 quarters for the assimilation to take place and a little bit of the synergies to get unleashed. And then maybe, after that, we'll see better performance. But from a valuation perspective, from the opportunity perspective, quality of management, track record, I think you cannot but not have HDFC Bank as part of your core holdings. All of us have it. A lot of institutional investors also have it. From that point of view, generally positive. But I just thought that maybe the underperformance would get reversed from this quarter, but maybe it's getting delayed at this point of time.
Hi, Deepan. Deepan, I wanted to ask you about IdeaForge. Blockbuster listing. You double your money if you got it in the IPO. Yesterday, the stock pulled back, but today it's resumed. Like the product it's making, the drone. Just rocket is what we're seeing on that stock. What's your view on it? Too expensive to get in right now?
Yeah, absolutely. I think, these kind of stocks, you want to buy them once you have seen the actual performance, track record, listing history. One shouldn't get carried away with the kind of momentum which is there or the fancy which is getting built on the stock. No doubt its future will be fantastic and great, but in investing, it's important to buy a good business at a reasonable valuation. And I'm not sure that valuations are reasonable for Idea Fort, so I'll just take a pass on this one.
Dipanju, stay on. Need to get into a break. We'll come back and get chatting also with Amit Gupta of ICICI Securities PMS on the other side. Welcome back. Let's turn our attention now to Mazgaon Dock. Shares of the stock jump after sources tell us that the company has bagged an order from the Defence Ministry to build another 3 submarines. Look at the way the stock is locked in an upper circuit of 10%. Parikshit is on the phone line with the details. Parikshit.
Well, recently during the Prime Minister's visit to the United States, we had seen the US Navy signing an agreement with Mazgaon Dock Limited to repair US Navy ships here in India. Now, this is another boost for Mazgaon Dock because there will be a deal for 3 submarines, 3 Scorpion submarines to be constructed by Mazgaon Dock, which could be signed during the Prime Minister's visit. We believe that the Defence Procurement Board has already given the initial approval to this deal and also the acquisition of 26 Rafale marine aircraft for the Indian Navy. Now, this had been a long pending demand of the Indian Navy to acquire a fighter jet for its fleet, and they had been looking and exploring options between Boeing and Rafale, and we now believe that the Defence Procurement Board has given the initial approval to Rafale. Now, both these deals need a final approval that will come from the Defense Acquisition Council. And then the deal is expected to be signed during the Prime Minister's visit to France this week and the meeting with President Macron. In total, 5 to 6 defense deals are on the cards. There is a deal for joint development of jet engines between Safran and DRDO, which is also being discussed. A deal for helicopter engines is in the works. And companies like Thales have also shown interest in the defense sector in India. So all in all, we could expect some big ticket announcements on defense.
Okay, got that. And that has been the story, Parikshit, for the last many months, hasn't it? And the market has duly taken note of it. Thank you very much for the details. Look at that. Mazgaon Dock, BEL, a lot of these stocks are buzzing around even today. In fact, Phillip Capital has released a note on the sector as well. They've initiated coverage on a bunch of stocks like BEL, Bharat Dynamics and more. Manglam has more details on this one. Manglam, what is Phillip Capital's thesis?
Well, Phillip Capital's thesis is, an 8-part thesis, but the important part is that they expect a $110 billion opportunity over the next 6 to 8 years. And just for perspective, over the last year itself, companies under their coverage in this sector did revenues of just under $8 billion. So there's a huge headroom out there. And mind you, these stocks have, rallied anywhere between 3 to 4 times in the last 12 months or so, a little more than that. But Phillip Capital believes that there is a lot more on the way up as well. In fact, of the $110 billion in terms of an opportunity, $44 billion would be aerospace. Shipbuilding would be about $40 billion, with guns and artillery be around $26 billion itself. Now, what is their thesis? Why are these stocks placed favorably? One, because all these companies have long-term execution growth visibility backed by robust order book as well as a healthy pipeline. Secondly, timely execution due to localization and integrated modular construction as well as subcontracting would bring them a lot more opportunities. Thirdly, the companies have domain expertise, they have government preference, and these are high barriers to entry as well. Fourthly, everyone has now better balance sheets. At the same time, they can avoid major working capital issues as well. They have some in-house R&D investments that they've made and some additional tech support that comes in from DRDO too. Make in India as a theme also works for them. In fact, FY13, the Indian spend in defense capex was 38%. Now that has increased all the way up to 68%. And what do investors want? They want capital appreciation. They want dividends as well. All these companies have dividend payouts of anywhere between 30 to 60%. And as things improve, these companies will only see better margins because of their core products seeing efficiencies improving. The stock calls that they have: a buy on Bharat Electronics with a target price of 159, a buy on Bharat Dynamics with a target price a little over 1,428 rupees. Solar Industries is a buy with a target price a little upwards of 4,300 rupees, and MTAR with a target price of around 2,637.
Okay, all right, Mangalam, thanks a lot for that. Well, we'll focus on the defense stocks in just a bit, but Timsy just bringing us some information, and sources to CNBC-TV18 say that the MCA has issued inspection order against Shree Cement. The orders issued take cognizance of the issues with regard to related party transactions, corporate governance matters, as well as issues pertaining to improper income tax filings. Remember, this has been, there was an inquiry, there was a survey that was considered a couple of weeks back or so. We were waiting for the outcome, but this appears that the street has not taken it very, very well because the stock had stabilized actually post that survey. We'll have to wait for further details, but this is just the initial information that we're getting in there. My colleague Timsy will join us in just a bit and fill us in with what more she's picking up. So we'll focus on Shree Cement in a bit. But Deepan, what's your view on these defense stocks first?
Yeah, Nigel, I think clearly they're living up to their expectations, and at least in terms of order inflow, and on and off, some of the good quarters also come through in terms of performance. But from a valuation perspective, I think a lot of the positives have got factored in. Investors need to keep in mind that although there's earnings visibility, you cannot rule out earnings volatility. And I would like to buy these defense stocks on a soft quarter when they have perhaps missed their targets, or for some reason the operating profit margins have declined due to the phase at which the order completion is at, or there are increases in raw material prices. But when stocks are flying the way they are, I do not want to get into them. End of the day, execution is the key risk in all these defense companies. They are manufacturing companies, industrial companies, and they need to have adequate capacities to deliver and bill as well. But as I said, I think the main roadblock of at least taking a plunge at these levels is the high level of valuations.
Okay, thank you very much for that, Dipan. Let's invite Amit Gupta, Senior Vice President, Fund Manager at ICICI Securities Portfolio Management Services, PMS, on the show now. Amit, on these defense companies, while the order wins have been very, very robust, there is a risk of execution. There is a risk that the revenues are going to be lumpy. And of course, valuations have also run up considerably. How would you assess the pros and cons, the risk reward in the defense stocks now?
So I think one very interesting thing is that, in the defense, you have number of, items. For example, you start from aircraft, now you are going into, artilleries, then you are going into some other things, and then drones. So there is, if you look at, in this particular basket, there are so many things now, and the government is really agile actually in getting all this from outside. I think this may be a big thing opening up for India. Valuations in the short term, I think definitely are looking a little more costly. But otherwise, if you look at the longer trajectory from here, I think very good upsides are possible in these stocks. Now, when I look at Bharat Electronics, for example, the stock, I think our target is going beyond 150. It has reached to 125, 127 levels right now. Hindustan Aeronautics, you are already seeing the stock split is being announced. So I think before that, there may be, some momentum, but after that, there may be some consolidation also possible in the stock. So overall, I think the other trajectory of defense, like you talk about the Mazgaon dock, Bharat Forge is another stock which has been reeling actually at little lower levels. I think that can also come up because they are also talking big about the defense orders going forward beyond the auto ancillary theme that they are looking at. I think one thing which was dragging Bharat Forge so far was the Class A trucks in the US. So there are a number of things attached to this stock. That's why it has been underperforming. But I think the defense angle goes for them also. So that can also one stock which can perform going forward.
Okay, so a positive on defense. Amit, just stay on. We have more questions for you. We just also want to address this news on Shree Cement that's flashing on the screen. It seems that the Ministry of Corporate Affairs has now decided to initiate some sort of investigation into Shree Cement. This is an inspection order really against Shree Cement, and it's coming from the ministry. The stock is reacting negatively. We have our colleague Timsi joining in. Timsi, is this connected to the ongoing IT searches? I think, okay, we don't have Timsi at the moment. What we know is that there's been some aspect of some allegations of related party transactions, and of course there was the IT searches that were going on. Yeah, so it seems now there's an investigation that's
we'll have to see, because the stock pulled back big time when initially the survey charges did come about, and then it stabilized. So some part of the street still believes that some of those numbers that came out there, there were many thousand crores that came out. It wasn't a possibility. That's the verdict that the street has taken. So we'll have to wait for the outcome out here. But it seems this is something to do with on those lines itself. And that's why the stock is not getting smashed out of shape because as it did pull back and then it stabilized. So now we're waiting for the outcome of this. But for the time being, the fresh news is that the MCA has issued inspection order against Shree Cement.
Okay, for what it is, it is a bit of an overhang on the stock. So let's see how this matter progresses. But to get back to the conversation with you, largely speaking, industrials is one side of the market. Capex plays for industrials, which I think most managers are quite optimistic on. You yourself have spoken, quite positively on this theme in the past as well. But tell us, how would you now play it through what kind of stocks where you still have good entry points and you still have some valuation comfort?
So yes, definitely. So here also in industrials, you have number of parts. So I think one of the angle is bearings. I think one should look at this now because they have already gone through a long consolidation now. When you look at Timken or SKF, so SKF had corrected already from 5,000 to 4,000, and then this move, a very recent move has started because now it has got the approval for Class C and Class K, bearings for the railways. Along with this, SKF caters 50% to automobile also. And automobile, what we are seeing because of lower crude prices, because of interest rates seems to be topping out. I think the automobile is making the bottom in India. And that is where the segments catering to automobile, they are also coming up. So SKF is one, I think, which can have a good revenue generation going forward. I think the results also will be pretty good. And this new angle of railways, I think this is another kick. And you are seeing that 90,000 wagons requirement has come. So you have already seen that direct companies manufacturing the wagons performing really well. So yes, 60-70% comes from the Kolkata region actually because they are based there. But not only that, I mean, if you look at the bearing companies, the fastener companies which are linked to that, they are also going to see the surge in the revenues. And that is where in India, luckily, we have one of the largest producers of bearings in the world, which is SKF. I think we should look at such kind of companies now, where the corporate governance issue is not there. They have been for a very long period now, and they have shown execution skills. And I think the FII money, when it comes in the market, it definitely looks into such kind of stocks now.
Okay, all right. Talking about some corporate governance issues, Amit, one company that's never had any of those issues is Shree Cement. But of late, there is some news flow that's coming in, which is quite negative for it. My colleague Timsy, she's going to join. She's going to tell us what latest she's picked up on Shree Cement, and then we'll come back to you, Amit, to get your view on it. Timsy, go ahead. What are you picking up with regard to Shree Cement?
Well, sources are indicating that MCA has now ordered inspection in the books of accounts and the entire working of Shree Cement, and this is with respect to issues related to corporate governance, with respect to issues related to wrong filings with the income tax authorities, and not to forget, there has been a recent survey also that happened by income tax on Shree Cement, and this investigation order, this inspection order is also with regards to related party transactions. So all these three issues are there when it comes to what MCA is currently looking for, and they want Shree Cement to come forward and clarify during the inspection. Let's see what happens, because another issue that was there in their mind is also pertaining to CSR. Let's see what exactly MCA officials they find once they begin this inspection. What is the final report that they submit with respect to Shree Cement?
Okay, all right. Timsy, appreciate you joining in and giving us, that quick update out there. Well, Amit, Shree Cement has been the best pedigree, one of the best run companies that we have seen from the cement space itself. And that's where it gets a valuation premium. Now, suddenly, this news that's coming in there is making things a little bit gloomy. How would you approach it? We know it's a well-run company, lowest cost producer of cement. Valuation is a little bit elevated, but they have good amount of expansion plans as well. Will you look to buy into this kind of dip, or do you think that you'll wait and there are other better cement options?
So I think there is too high an expansion. If you look at the whole cycle of infrastructure, we have not seen the cement stocks participating that much. And the reason being that if you look at the expansion now, so almost everyone is going to be double in capacity. Adani Cement, they are talking about from 70 to 140 million ton. Ultratech Cement, which used to be 113 million ton, they are talking about 160 million ton. So in that case, the capex, the supply is going around 14% of CAGR, but the demand actually is coming up. So infrastructure was driving the demand. Housing is picking up now, but still it is 9-10% of demand pickup. So there is a mismatch. And we have seen because of this, the cement companies have not been able to increase the output price, or the cement price rather. We saw it in the month of February, but it was rolled back actually afterwards. And that is why historically, if you look at the EBITDA per ton in the cement companies revive only when they start increasing the output price. I understand the raw material cost of petcoke and all, it has come down. And going towards election, it is also
Amit,
possible. Yes.
Amit, I just want to understand, will you buy into this weakness on Shree Cement?
So we had this talk, but we have exited actually before because of the premium valuations.
Okay.
Any thoughts on Apollo Tyres? I remember earlier this month, Morgan Stanley had downgraded the stock, and they're saying that all the positives are priced in. The company itself has laid out an FY26 or 2026 vision where they want to improve margins, improve their return ratios. But according to some on the street, it's probably priced in. How would you look at Apollo Tyres in the entire tyre pack?
So I don't think so. I think if you look at the last whole decade, it has been, highly underperforming stock. And the reason being, we saw a lot of problems in the European area also. But now they have increased their market share actually very smartly. Almost 270 bips of market share has been increased in the European region from where they are getting 30% of the business, because they operate from Hungary. And we have seen that the whole energy cost, which has moved up in Europe, it has not impacted that much actually in that particular region from where they operate. When I look back into India, I think the interest rate seems to be topping out. And if you look at the crude prices, which is where the rubber prices actually are taking, the price that is a derivative actually of crude. We have seen that because of lower prices, there is sudden demand which is coming up, and it is also not going to be impacted with the EV disruption. So overall, at a 21 price, 21 times stock, which is much lower than MRF, which has already crossed 1 lakh rupees. I think this is one stock which is cheaply available. And relatively, on relative terms, I am saying, and I think after a long period of consolidation, it is coming out. So in that case, I don't see a major downside here. Rather, if it is happened a little bit, I think you should accumulate more and look for beyond 500 type of targets actually going forward.
Okay. By the way, quite a few names on the mid-cap and small-cap screen that are up and about today. There's also Tejas Network, Cochin Shipyard, Garden Reach Shipbuilders, a lot of these names. Mazgaon, of course, we've been discussing. There's Bharat Dynamics, which is up now a good 14%. Big moves on these stocks. And then, of course, you have the recent listings, which we've been discussing, both Cyient DLM as well as Idea Forge. Lots of names moving around. So let me end with the two hottest themes in the market, Amit. One is EMS, this electronic manufacturing services. And we're seeing what that has done to stocks, whether it's a Sirma or, the new one, Cyient DLM. And the other, obviously, is defense. Anything that has defense on it is just, skyrocketing. How do you find valuations? Because, in both these areas, for EMS, we're talking valuations of 50 times, 60 times forward earnings now. So are you comfortable? Would you look at deploying any additional money here? Or would you steer clear?
So it's a new money which is going there actually. So you cannot define the length of the, to the extent the stock price can move. It is very difficult whenever such kind of money flow starts. These stocks were not participating in the last whole decade. And that is where actually, you will find new stocks coming up in this particular reason. So Bharat Dynamics, you just mentioned, before that we saw HAL and Bharat Electronics were performing. But now Bharat Dynamics also actually it has started performing. So you will see a consolidation period, possibly 1 quarter or so, and then again these stocks can start participating. So I think it's a long theme which is building up in India right now. We will see more private players also participating. That will be another kick. Right now, what names you have taken, these are mostly the PSUs. But private players also will come in, and I think that will define the new canvas for the defense. Now, when I look at the exports, so exports, I think whatever targets were taken in the PLI, so actually very clearly they have been exceeded. So that shows there is a lot of production push which is happening in the export, which is being exported also. If you look at Dixon, for example, so Dixon came down previously because we saw in the B2B segment, sometimes when the customer is not ready to give you higher premium, then you have to shrink your margins. And it happened with Dixon in case of Samsung also. And I think once the stock has come down, I think valuations are pretty good now. The stock is already halved from the higher levels. And now slowly we should start looking at, because the manufacturing theme in various segments in India is going to pick up. We cannot stop this particular move now in the Indian markets. I think you have to create your portfolios by looking at such kind of companies whenever such kind of downsides are coming.
Okay, all right. Amit, I don't know, in your earlier avatar, you used to track the F&O and the derivative space very, very closely, I think. So, still looking at it?
So, volatility is still down. I think definitely. So, when the walls are down, it gives you a sense that the put options have been written very strongly in this market. I think it may be a good trend for 2 or 3 months now where we are in.
So, you think that downside could be capped, right?
I think so. I think more stock-specific scenario for at least 2-3 months now.
Lovely. Thanks, Amit, for giving us that view, and thanks for discussing all those stocks as well. I recall many years ago we used to discuss a lot of F&O derivatives as well on television. Thanks for giving us your view out there. By the way, when we're having that chat with Amit, take a look at what's happened to the Nifty Financial Services Index. It's moved southward. That expiry-related factor has played out. I'm guessing one of the larger names as well would have pulled it down. So I think we should pull up the HDFC twins. HDFC was showing some weakness, and it's a sharp fall. So once that 20,030 odd level broke, that's when we saw the big slide. And HDFC, well, that's one of the stocks that's pulling it down. And Bajaj Finance as well, midway through the trading session, it's lost its way a little bit. Time to take a short break. On the other side, Nimesh will be joining us to tell us what's going on in dealing rooms we'll also get our technical experts back with us. Well, the markets are under some pressure from the high point of the day. You would have thought it's going one way, but clearly it slipped a little bit. The Nifty Financial Services Index and the Nifty Bank, both of them at the low point of the day. Let's get a better insight, though, in terms of what's going on in dealing rooms. Nimesh joins us in our special segment, D Street Chatter. Well, Nimesh, how are you reading it?
Hi, Nigel. As you rightly pointed out, off days high, but again, the momentum is clearly with the bulls, and that's backed by the FI buying as well. So even in today's trade, the feedback is the flows are with a positive bias. The surprise has come in a couple of sectors as well, but I'll talk about the broader markets. The Nifty mid-cap index is up close to 1% and has relatively outperformed today, largely because I understand there is a small market at close basket buying in some select mid-cap names. So that explains the move in the overall mid-cap space. The sector which has done well today, in fact, not only today, but for the entire year this year, has been the defense names. Huge volumes on those stocks, and there's a big momentum as well in the defense stocks for the last many days, and that continues today as well. The sector which is relatively under pressure today is the chemical names, and largely so because I highlighted this on Friday as well, that for quarter one, the street is expecting a very weak quarter for most of the specialty chemical names, and you're seeing some bit of shorting as well in those stocks by larger HNIs today. So to sum up, a bit of profit booking at higher levels, but the momentum is still with the bulls, and there is strong amount of FI buying as well, specifically towards mid-cap in today's trade.
Indeed, the mid-cap index up nearly 1%. The advanced decline ratio also holding up in favor of the gaining side. Nimesh, what about individual stocks? What are you picking up?
So in terms of individual names, the first stock on my list is Indigo. That stock has been buzzing for the last many days now. In fact, the street is quite bullish on the stock. Remember, the Ganwal stake overhang continues, but now there is a closure window, so the block can happen only after the results. And even then, the feedback is maybe that block will be lasted up by single long only fund. So there is a lot of interest in this particular stock. That's the first one. Second stock is Zomato. Like we saw what happened in Nykaa for the last couple of days, even Zomato is buzzing in trade today on good volumes. I believe some buy flows are there at FIS, and that's the reason you're seeing a bit up move in that stock as well. The third stock is Krishna Medical. That stock saw some blocks as well, I believe, in the early trade. The volumes are on the higher side. It looks like the upside is largely because the selling pressure from a leading FI seems to be largely over in Krishna Medical. And the last stock is Techno Electric. Again, buzzing in trade today. The chatter or the buzz seems to be that maybe the company is likely to back a very large order very soon, and hence a bit of up move in that stock as well.
Okay, all right, Nimesh, thanks a lot for that. Well, Mitesh comes in back with us to tell us what to buy or sell today for a reverse trade. Hi, Mitesh. Tell us, how are you reading this?
Yeah, I think, I've been looking at the fact that the market has kind of respected the earlier high, but there's no significant amount of weakness as yet. So we're still trading with long bias. So I think, we've taken some profits off. But on the stock side, the idea is to be still on the long side, though not many, not extremely aggressive, because you would want to see the earlier high being cleared before betting aggressively on the market. So trade long, but mild caution is advised. And I still believe that, in case this 19,520 is not taken out, we could still go into consolidation. But maybe that we'll know that answer in a day or two. For the timing, I have a BTST on Dixon Tech. I think that's moved up very nicely. So keep a stop at about 43.50 here. Look for targets of 44.20. And Midhani or Mishra Dhatu Nigam, that's the other stock which I would recommend a short-term trading buy. Keep a stop at about levels of 314. Look for targets of 336.
Okay, got that. Thanks very much for the stock updates there, Mitesh. Well, with that, let's move on. As we've just been discussing, the EMS, the electronics manufacturing space, continues to be red hot. And Cyient DLM, the new listing, is up another. It was listed, I think, with a 50% premium, and the stock is up another 6-7% today. Our colleague Surabhi Sutaria is now joining it. Wow, make that 18%. I think I must have seen the stock about an hour or so back. But what a move, Surabhi. I mean, this is absolutely stunning, and you've been telling us this probably is one of the most expensive offerings in terms of valuations in the space, right?
That's correct. It is one of the most expensive. So let me take you through some numbers. As you said, it's up nearly 20%. It listed also over 50% premium yesterday. So there was some mutual fund action too. Nippon India Mutual Fund bought 5 lakh odd shares at 403 rupees per share. There were some marquee other investors also who participated in the anchor book for the likes of ICICI Pru, HDFC Mutual Fund, Aditya Birla Sun Life and Tata Infra Fund. So originally the issue price was 265 rupees. That means that at trailing 12 months the valuation would have been 66 times, and for 1 year forward the valuation would have been close to 49 times PE. But with the 20% gain that it has seen today, the valuation is now at 125 times trailing 12 months PE and clearly and close to 92 times FY24 PE. Now, when you compare it to the peers as well, Dixon is trading at 45 times FY24 PE, which Cyient DLM is nearly double the valuation of Dixon. And when you compare it to the other ODM players which were recently listed like Keynes, Sirma, Avalon, all are in the range of 30 to 60 times FY24 PE, but this one is at 93. So it's the most expensive one out of the lot.
Thank you very much for that. That valuation plate is very helpful. Forward multiples or FY24 valuation multiples of 30 to 60 times. Keynes being the most expensive and Avalon Tech being the reasonable one at 30 times forward FY24 earnings multiple. Well, earnings season is upon us. It kickstarts with TCS. TCS press conference is scheduled at 5:30 p.m. So the earnings should be out closer to 5 p.m. So markets are, we have 15 minutes to react today and the whole day of trade tomorrow. Let me quickly run you through what's the expectation. Well, this is the first press conference which will be addressed by the CEO, K. Krithivasan. Also, June could be the slowest quarter for TCS in over a decade, X of the COVID quarters. If you pull up the Q1 revenue growth rates, Q1 only, the June quarter, because it's seasonally strong, as you would see, the growth rates have been very, very robust. Q1 FY21 was the COVID year, so you strip that out. But other than that, you would have a growth rate anywhere between 2 to 4%. But this time, it's not going to be so. Revenue growth is going to be very flat because there is macro uncertainty. Discretionary projects are being put on hold. For some people in the industry, projects are being cancelled. There is pressure in the BFSI sector. There is pressure on retail. North America, confidence amongst the clients is on the lower side. Dollar revenue growth, these are the numbers, 0.5% on the top line. Margins likely to contract by more than 110 basis points on account of a wage hike. And this will put pressure on the company's profitability. So profits will also be down. That's because the margins are going to be lower due to wage hikes. That said, the silver lining is going to be the deal wins. So this quarter, the company announced that there was a deal cancellation from Transamerica. They said that they want to go in-house. But if you exclude that bit of negative news, there have been a slew of other deal wins. What's the street going to be focusing on? I think it's going to be more on, the corporate behavior on spending, the corporate behavior on whether the ramp up of deal wins are going to take place, whether the orders which are in the pipeline are going to get converted into revenues. So the street is going to be watch that, because on it hinges the H2 recovery, H2 FY24 and next year recovery. And of course, even management transition. 1 month since Kriti has been on board, how does he assess the environment? What's the way forward? Unlikely they're going to tell you anything more about, any big change in priorities, because TCS in a way is a very well-oiled machine, but the street will track that. On that subject of buyback, remember there was a buzz sometime back, but the companies are not announced that they will be considering a buyback, so that clearly is off the table. We'll get into a very short break. We'll come back with more on the markets.
Welcome back, and the Nifty is making some moves all over again. We have a bit of a lift-off in some stocks. Titan would be one. Let's just pull up Titan very quickly. Remember, it had sold off quite a bit after the Q1 update, and one of the foreign brokerages had said that basically the rally has been over and done, but the stock has other things in mind because it's really taken off right now. Nestle is seeing some good traction as well. Tata Consumer, basically consumer stocks anyway, FMCG and consumption have been a very solid theme in the market. And Reliance itself is keeping the things up on the other side, the green side of the screen for the index as well. Jay Bala of Cash the Chaos is joining us on this leg of the show. Jay, good afternoon. Always good having you on Closing Bell. So tell us, first of all, let's talk Nifty, because what we've seen in the last couple of sessions is that this 19,500 to about 19,520, 530, this is becoming a bit of a near-term hurdle. I mean, the market's finding it a little tough to cross it with the kind of momentum that we saw in the earlier week. What do you make of it? What are the Nifty levels that you're tracking now?
Absolutely. Good to be here. See, the markets had projected these levels of 9,500 and the markets are responding to those resistance. But the bullish structure for the Nifty is incomplete. It needs to make at least one more higher high. But the problem the market has is that the 19,303, the pullback that we saw, is too shallow to be a complete short-term correction. So the market needs to at least pull back somewhere closer to 19,100 for it to resemble, an extreme short-term correction. So I think that's what the market is trying to do. But in the event that the 90,303 that we saw yesterday or a couple of days ago, if that still holds and the market were to head a little bit higher, then the extreme short-term movement, the intraday movements of Nifty is going to get very significant. But, the short-term is still bullish. We are still looking for higher highs, probably projecting levels of 19,750 to 19,900. But it would be ideal for the markets to drop closer to 19,100.
Okay, all right. Hi, Jay. Good afternoon. Jay, what about individual stocks? I believe you're quite bullish on Pidilite. Tell us how that's set up.
Yeah, this is like laggard within the FMCG space, and the short-term movements are quite attractive. As long as the stock can hold about 25.58, I think fresh 52-week highs are on the card somewhere closer to 29.28. Likewise, I know I have a bullish objective on and a small cap IT Infobeams technology. As long as the stock can hold above 447, I have an objective somewhere close to 880 record highs. It's not going to play out really quickly. It's a medium-term outlook that can play out about something like 3 to 6 months or slightly beyond. It may not be as fast as Selectech that we had picked up last week, but it's a very bullish setup, pretty similar to Selectech, but it is a slightly illiquid name. But so a stop loss above 447 is absolutely essential.
Jay, Reliance Industries in the last few days is seeing some great momentum. Yesterday and today combined, the stock has moved up nearly 5%. And this month, it's seen a rally of 8.5%. Do you see a lot of upside in Reliance?
Yeah, I think Reliance, as long as it can stay above 25.44, I think it's still trending up and pushing towards record highs. An objective closer to 28.50 is what is potentially happening here. But from a very long-term perspective, I'm slightly cautious about it because it's moved up from the September 2020 levels in a very choppy fashion. That's not a sign of strength. But as long as the stock can hold about 25.44, assume the bullishness to continue. But see some resistance towards coming near the all-time highs about 28.50, 28.52.
Okay, that's a view on Reliance. Jay, just want to get your thoughts on some of these consumer stocks. I was just looking at Titan even now. I mean, the momentum has been so strong. The stock has been making almost very regularly fresh 52-week highs. So either that one or any of the other FMCG names, do you see any worthwhile trades there?
Within the FMCG space, I think Dabur is relatively weak. Godfrey Phillips is relatively weak. But as long as ITC can hold about 440, I think the sector as such will trend up. But the momentum is dissipating there. Not something to be worried about. But the Nifty FMCG index as such, if it can hold above 5,500, continue to see higher levels. But if 5,500 were to break below, on an intraday basis or even on a daily closing level, I think that will be a cause of concern for the sector. But keep a focus on ITC as long ITC is the driver for the entire sector. So still trending up, but it's weakening a bit.
Okay, what about the Nifty Bank? You said on the Nifty, you would call it a healthy sign if the Nifty dips to levels of 19,100 and then starts its up move to levels of perhaps even 19,900. What's the trajectory on the Nifty Bank?
Yeah, the Bank Nifty is relatively closer and relatively weaker. And, as long as the sector can hold above 44,000 to 43,400, I would assume it's still trying to make one more record high. But, I've projected the long-term resistance at about 47,000 to 49,000. And I don't think from that point of view, it's got much upside to work with. We had picked up RBL Bank, AU Small Finance Bank a few weeks ago. They're all pushing and coming to fresh 52-week highs. Try to slightly lighten up there. The banking sector is a laggard compared to the Nifty and the broader market.
All right, let's wind this down, Jay, with a quick word on the dollar index. How is that shaping up?
Yeah, I think the dollar index is going through an ideal push towards 100.7 or slightly below that. But once it does that, it will complete a long-term correction from 114.7 that it clocked in September last year. And once that move is complete, we can. I'm anticipating a resumption of the long-term uptrend for the dollar index. The more important thing here is the U.S. bond yields. The U.S. 2-year has crossed the regional banking crisis highs. The U.S. 10-year has also crossed the regional banking crisis high registered in March. So, watch out for it. At the moment, the markets are still trending up, but cracks are starting to appear.
Okay, Jay, thanks so much for stopping by and giving us that view on the index. We look forward to having a chat with you next Tuesday as well. Well, time to wind down the markets then. The Nifty Financial Services Index, that was the naughty boy today. That ended at the low point of the day, and that's the one that put some pressure. Earlier on in the trading session, the Nifty was comfortably holding about the 19,500 odd mark. What was losing? UPL. Various global majors, they had cut their guidance out there, so that was under some pressure. Steel came in for some profit taking. JSW Steel, Bajaj Finance as well came off the high point of the day. On the flip side, you had stocks like Sun Pharma, Eicher Motors, Tata Consumer. All of them did well. Couple it with heavyweights like ITC and L&T. What else?
Well, HCL Tech goes home with some cuts ahead of numbers tomorrow. HCL Tech was down close to about 1%, even as the rest of the IT companies tried to move up. Banks sold off in the last 1 hour. Remember, today was the FinNifty weekly expiry. The Nifty Bank closes in the red with names like Axis Bank, State Bank of India, HDFC Bank, ICICI Bank, all seeing some amount of downtake. But in the broader markets, particularly in the F&O pack, you had names like Vedanta under pressure. Bandhan Bank saw a fair amount of cut. And on the gaining side, Tata Communications, pretty big volume, 7% price increase.
Yeah, Tata Communications was quite a mover, as were the defense stocks. I mean, look at a long list out here. Mazgaon Dock, 10%. Bharat Dynamics, 14%. Cochin Shipyard, 10%. Garden Reach Shipbuilders, 6%. Idea Forge, 9%. Zen Technologies, 13%. Paras Defense. I could just go on and on. This market, at least the defense space in the market is moving on steroids. And, this is after phenomenal moves. Some of these stocks have rallied 400% already. And then we're getting these moves. Anyway, beyond defense, it's Nykaa. Good day for this one, 6%, looking quite pretty. And then you have some more names like Kalyan Jewelers. Very big move on Kalyan again, 6.5% on the upside. Cyient DLM, 18%. So car trade, 13%. Well, you can safely say that the mid-cap and the small-cap market is on fire. And it's here where the party is on. Monday, Tuesday, any day of the week. Party's always on.
Well, Wednesday is going to be the big day, right? Because in India, you've got two important numbers. TCS as well as HCL Tech. On the macro front, you've got the India CPI inflation print, and then you've got the US CPI inflation print. So Thursday perhaps could be a pretty decisive session for our market.
I think the broader markets and Surabhi have one thing in common.
Party.
They both love to party.
As long as it's with due caution, I guess a party never hurts. On that note, we are going to take your leave. Thank you very much for joining in. It's a wrap from the entire Closing Bell team. But don't go anywhere because our special offering, Indianomics, is coming up after this break.